Property Investment for Passive Income, a Comprehensive Guide. By Dr. Pooyan Ghamari, PhD, Swiss economist. Investing in real estate remains a premier strategy for generating passive income and achieving long-term wealth. However, successful property investment demands strategic planning, detailed research, and a keen understanding of the market. This comprehensive guide aims to equip you with the knowledge needed to build a steady stream of passive income through property investment. Understanding passive income in real estate. What is passive income? Definition: passive income refers to earnings derived from investments that require minimal effort to maintain. In the context of real estate, this typically includes rental income from properties. Benefits: passive income offers financial stability, the potential for long-term wealth accumulation, and freedom from the constraints of active income sources. Key strategies for property investment. Buy and hold strategy. Long-term rentals. This involves purchasing properties to rent out over an extended period. The strategy capitalizes on property appreciation and provides a consistent rental income stream. Market research. Focus on areas with strong rental demand, excellent infrastructure, and the potential for property value appreciation. Short-term rentals. Vacation rentals. Investing in properties located in popular tourist destinations or cities with high visitor traffic can be lucrative. Platforms like Airbnb facilitate the management and marketing of short-term rentals. Flexibility. While short-term rentals can offer higher income potential compared to long-term leases, they require more active management and upkeep. Real estate investment trusts, REITs. Indirect investment. REITs allow individuals to invest in real estate without owning physical properties. They pay dividends from rental income and property sales, offering a hands-off investment option. Liquidity. As REITs are traded on major stock exchanges, they provide liquidity and ease of entry for investors. Steps to successful property investment. Conduct market research. Analyze local markets. Study property prices, rental yields, vacancy rates, and economic indicators in potential investment areas. Comprehensive market research helps identify the best investment opportunities. Future development plans. Look for areas with planned infrastructure or commercial developments that could enhance property values over time. Financial planning. Budgeting. Accurately calculate the total cost of investment, including purchase price, renovation costs, ongoing maintenance expenses, and potential property management fees. Financing options. Explore various mortgage options, interest rates, and loan terms to secure the most favorable financing for your investment. Property selection. Location. Choose properties in desirable locations with high rental demand. Proximity to schools, workplaces, public transportation, and amenities significantly enhances property value. Property condition. Thoroughly inspect properties to avoid unexpected repair costs and ensure they meet local safety and quality standards. Property management. Self-management versus professional management. Decide whether to manage the property yourself or hire a property management company. Professional management can save time and ensure efficient operations, especially for investors with multiple properties. Tenant screening. Implement a rigorous tenant screening process to minimize the risk of default and property damage, ensuring a steady and reliable rental income. Maximizing rental income. Setting the right rent. Competitive pricing. Set rent based on current market rates and the unique features of your property. Overpricing can lead to vacancies, while underpricing reduces income potential. Regular reviews. Periodically review and adjust rent to keep pace with market changes and inflation, ensuring optimal returns. Enhancing property appeal. Upgrades and maintenance. Regularly update and maintain the property to attract and retain high-quality tenants. Consider adding amenities that increase rental value, such as modern appliances, landscaping, or energy-efficient features. Curb appeal. Improve the exterior appearance of the property to make a positive first impression on potential tenants, which can also justify higher rental rates. Effective marketing. Online listings. Use popular online platforms to market your rental property. High-quality photos and detailed descriptions are essential to attract more tenants. Social media. Leverage social media channels to reach a broader audience and showcase your property's best features, engaging with potential tenants directly. Mitigating risks in property investment. Diversification. Spread investments. Diversify your property portfolio across different locations and property types to reduce risk. Geographic and asset type diversification helps mitigate the impact of local market fluctuations. REITs. Include REITs in your investment strategy for additional diversification without the complexities of direct property ownership. Insurance. Property insurance. Ensure comprehensive insurance coverage for your property to protect against damage, theft, and liability issues. Rental income insurance. Consider insurance that covers loss of rental income due to tenant default or property damage, providing financial stability in adverse situations. Legal compliance. Regulations. Stay informed about local property laws, landlord-tenant regulations, and zoning requirements to avoid legal complications and ensure smooth operations. Lease agreements. Use legally sound lease agreements that clearly outline tenant responsibilities and protect your rights as a landlord. Conclusion. Investing in real estate for passive income is a powerful strategy for achieving financial independence and long-term wealth. By adopting the right investment strategies, conducting thorough market research, and managing properties effectively, you can build a robust portfolio that provides consistent income and growth. Dr. Pooyan Ghamari, PhD, Swiss economist. With strategic planning and diligent management, real estate investments can unlock significant passive income opportunities, paving the way for financial freedom and sustained prosperity.